This is News Talk 980 CKNW.
Well, the Federal Reserve hinting strongly that a rate increase could be coming in June. Haven't heard that for a while. Of course, the markets are reacting. We got the stocks, the loonie, gold falling. But is it really that straightforward? And how seriously should investors really be taking this latest hint at higher rates? Let's bring in Michael Campbell, the host of Canada's top-rated financial show, Money Talks. Hello, Michael.
Hi, Linda.
A little bit like Groundhog Day, isn't it? Everybody waiting for the latest announcement.
That's the whole market is about that now. I mean, it's incredible that every time they have a meeting, and so they give a little announcement after the meeting, and everybody waits for that. Then they release the minutes, and that's what this was, where you get the detailed conversation back and forth, and everyone waits for that. And you can see, look at the reaction of the market. It all is, what is the Fed about to do? I liken it like that old Clairol commercial. Does she or doesn't she? In this case, it's Janet Yellen. Will she or won't she raise rates? The thinking feels like it's all over the map. I think because it is. You got financial and economic events around the world that are so fluid. Things change literally overnight. But I'll give you this, though. This comes back, and I want to make the point again that, one of the groups in our public domain, public discussion, they're anti-capitalist. They talk about unfettered capitalism. This has nothing to do with capitalism, what's going on. I think every one of us knows that the central banks are actually manipulating interest rates, manipulating currency rates. Obviously, the price of every asset class moves, as you alluded to, right up front. I mean, what's going on here has a lot more to do with government control than free market capitalism.
Yeah, absolutely. So then explain to us, why does the Federal Reserve want higher rates?
I think there's a lot of reasons, and I'll start with this. One that they completely underestimated, and that is you're killing savers. That's one side. But the group, the seniors who are preparing for retirement, didn't go out and spend. That was the idea, lower interest rates and people go spend. No, the seniors looked at guys who are within, say, 5 or 10 years of retirement and go, my gosh, the rates are so low, that means I need to actually save more to give myself enough in retirement. So it actually cut back on consumer spending in that group. And as I say, the Fed didn't anticipate that whatsoever. So that's one thing. You're killing pensions out there, too. I mean, they've got a huge pension problem, as every Western democracy does. Well, this doesn't help with, one of the major portions of any pension is going to be in fixed income. Well, they're not yielding anything, as everyone who's got a bank account knows. So I think they're looking at that, too. They want to get back to normal times, and these are anything but normal.
Yeah, no kidding. So when the Fed says its decision is data-driven, what does it mean?
Yeah, that means they're looking, and you're right, they've been saying that nonstop. And that means they're looking at all of the stats that are coming through to sort of try and evaluate whether the economy is strong enough to take a rate hike. But it's not just looking at what's going on in the States, which is, kind of like a C. It's not even a C+, I don't think. In some sectors it's okay, but they've still got a lot of problems there. But no, they're looking throughout the world. Like, I'll give you an example. You've got that big British vote, the Brexit. Are they going to leave the European Union or not? I'll tell you, if it looks like they're going to leave, there's going to be a lot of uncertainty around that. I think that influences the Fed decision. So, yeah, they're looking for stats and data all throughout the world to instruct them on what they should do next.
So it sounds like they're kind of all over the place, and there's lots of factors at work. So are they going to raise the rates or not?
Yeah, well, certainly the majority of analysts are starting to lean in that direction. Personally, I don't know, but I come on, we've been disappointed before. It's like Lucy and Charlie Brown with the football. How many times can Lucy pull the football away before we sort of suspect something?
Yeah.
So I'm going to have to absolutely wait and see. I mean, I know they want to. That's all I know.
So if they do raise rates, is that going to push the Bank of Canada then to go ahead and raise rates sooner than it planned to?
Yeah, it's a good question. I don't think so. I mean, we're a long way away from a strong recovery. And I can't emphasize enough that we've got a problem with economic growth. And part of that problem, though, are what's going on at the municipal and provincial levels, taking money out of the economy with more tax hikes. Every week I see something else that will remove more money from individual or businesses' pockets, which they otherwise would spend and invest. So, yeah, I think we're a long way for the kind of growth that would get the Bank of Canada to take notice and raise rates. So, no, I do not think what the U.S. does at this point. It certainly has in the past, but I don't think that's the case in this point.
Hey, let me just throw something else at you. So we saw the fires encroaching on these camps, these work camps in northern Alberta yesterday, and again today is another bad day. That means, all the people who thought they were going back to work, suddenly not. So I just want to get your quick thoughts on what you think is going to happen with the price of oil and then the price of the pumps.
Yeah, at this point, it obviously has not had a big impact on prices. I mean, we got an initial kind of jump in prices, but, for example, today oil is off slightly with that. So I think the problem is, of course the oil sands are important, but you're only looking at 1 million barrels per day. That still wouldn't, even when we took that off the market for an extended period of time, that's still not enough to get to the break-even of supply and demand for oil. So I'm just not seeing it have a big enough impact until there's something definitive coming out of that area saying, you know what, we're not producing for 6 months or 3 months or something like that. At this point, it's not had a big impact.
Yeah, just still another kick in the groin to Alberta when they're having a terrible year.
Absolutely.
All right, thanks for that, Michael.
Thanks, Linda.
Vancouver's News, Vancouver's Talk. This is News Talk 980, CKNW.